Welcome back, guys. So fresh week of trading, and this is another important week in terms of data releases, market news, and potential further insights, as we will examine in our session today towards Friday with important indicators from the US and elsewhere. Markets are and have remained in a way sideways pattern, at least in regards to the US dollar, which has not offered us kind of lots of momentum given the recent news events. However, what we observe is that the markets might kind of remain at interesting areas. And what am I talking about? We got claimant count change tomorrow on Tuesday from the UK. That usually gives us quite some input in regards to the economy, but also kind of tells us how much the economy is going to offer us some progress. And fairly recently, we haven't seen a ton of progress from the United Kingdom, but instead, what we've seen is the market was rather giving us negative data. The outlook, not positive. Unemployment data, somehow rising. So the Bank of England might kind of be interested in cutting rates even further. However, when looking at the markets in terms of the pound US dollar currency pair, we see some important momentum. The market has been rising fairly recently, and we are on the weekly chart here right now, but we observe the market does not give us further upside full momentum. Instead, we see that this candlestick, this pin bar candlestick, might be what's causing the markets to weaken further. Downside potential might increase, at least as long as we don't push towards the higher points here, which would be potentially what we've seen basically in the Australian US dollar currency pair, right? So that technical resistance area here, you can see that was already broken and the market is fighting with the upside. But back to the pound. If the market starts to depreciate, pushing back to below or lower supportive zones, say 135.50, 135.70, we could see a further decline in this market, and hence obviously kind of a continuation of downside momentum. The euro is kind of quite similarly behaving, and both markets are not giving us much more momentum at the moment. The US dollar remains weak. If we are looking at the dollar index, which we should do in a minute, then we can observe that the market momentum might actually continue to give us further negative headlines and potentially another decline in regards to the US dollar. Let's check out what the market tells us right now. The dollar index, based on the daily chart here, we see, and basically that's everything against the dollar as an index, the euro, Japanese yen, Canadian dollar, among other currencies. And if this index is falling, this means the US dollar typically falls, obviously, with about a 60% or more accuracy, basically based on what the euro US dollar is doing as the major part of this index. But the market now is still trading on top of this supportive area. Falling index means dollar weakens, but this is currently not the case, right? We observe that the market kind of had stopped falling and might actually rise maybe towards the 50 moving average, if I'm being asked at least. That's at least the short-term rebound we could see. A short-term rebound in this dollar index might tell us that the euro dollar obviously kind of would fall. And that's what I've just said. The pound US dollar weakening somewhat, the euro US dollar, and we can see it's just giving us the inverse correlation, right? So the market kind of stuck at this technical resistance pattern. The long-term trend still upside bound though, and the market might indeed increase higher. We see that last month, this doji candlestick pattern, right? So we get the candlestick body in the center, wick to the upside, wick to the downside, means a continuation pattern based on the previous motivation. And if the market breaks the upside, the trend looks actually quite cool and might give us upside momentum. Trust in the US, obviously kind of undermined, right? So like not really positive. Donald Trump, not really positively seen in general. Economic demand in the US, yeah, mixed basically. But since Trump took office, the dollar kind of weakens. That's what Trump wants, obviously, to kind of be more competitive. If the dollar weakens further, demand from the outside might support demand in the US economy. A cheaper dollar obviously makes goods and services from the outside world cheaper. So that's a positive story. But we see that the current worries in regards the AI sector keeps kind of being negative. And we see that right now, right? So the Nasdaq keeps pushing to lower levels. The market is still a bit of an uptrend, basically, right? So we are not in the bear market as of yet, at least looking at the charts. But let's compare the previous sessions here, right? So the market celebrated some upside here, and instead of pushing higher, the market fell. And that's exactly how we see it. The market kind of pushed higher, but instead of rising here, and that's the question mark, towards a new high point here, whatever, 26,000 points, the Nasdaq might be on track to weaken. Early in the week, higher blue candlestick still for now. We are trading early on Monday, but latter days in the week might tell us that the market will just start to weaken further. So a break of this important support area, you can see it and read it on the chart here, might kind of be the same as in the market would potentially weaken further. The downside momentum might hence increase. We see something similar in the S&P 500, not as negatively speaking when looking at the charting patterns, but comparing it with the past, to the past, we see the same story, right? So like as long as the support level kind of gives the market another upside, the market might rise. But what if the market doesn't push higher? And that's exactly how the story unfolds here. I'd be on the camp of saying another correction is potentially kind of on the horizon here. For me personally, it doesn't make much difference because the stocks I own, quite a few of them, roughly 60 of those are performing nicely. January was a great month for us so far for the stocks moving higher. And we added up extra sell or short positions on the S&P 500, which are in a drawdown, obviously, kind of. But the idea is that the S&P might fall, and we would cash in, obviously, kind of when the market falls towards a technical next whatever support zone, and then kind of wait to kind of use those funds to start accumulating fresh stocks or adding to positions which had not performed so nicely. Just follow up on fxstrateies.asia and check out our membership plans if you're interested to get to know more. Not only FX trading, not only markets in general, but obviously also we look at the equity market as a whole. Let's check out the oil market because it fits nicely right now. So we talked about this over and over again. The target as the technical resistance zone seems to kind of last and causes the market, or causing the market to basically kind of be well resisted. We see that the market is not giving us any major incentive to push higher. Instead, we've seen the market's resistance area has been tested a couple of times here in the past, and fairly recently we saw the exact same story, which is exactly the important area we want to focus and zoom in right now. The market kind of a couple of weeks back rose to the upside beyond this 50 moving average, a strong resistance in the past. And we've tested and seen this 50 moving average here, right? So then 2 weeks ago, we got this doji candlestick indicating the market might rise. Last week, the market was rising firstly, and then subsequently, basically Thursday and Friday, the market fell again towards below this rising trend line. And that's the important part, checking out this market only from the technical pattern here. We see that this market might just basically break lower as the uptrend line had broken and the market is just about to weaken further. Earlier last week, higher, end of the week, weaker, and now the market might basically weaken further. And this would kind of be the same story as we've talked in the past before. If the market starts to weaken further, we could see as well that the market will break eventually this 57 US dollar level. And if this level breaks, the market might celebrate quite a bit of a negative trend here. Let's ignore these kind of markers and check out the patterns here, and we can see that, right? So currently still we are basically in some uptrend full momentum here, but given the shorter term trend lines here, including all these resistance lines, we've seen it quite a lot. Even oil being strong next month, it's been weakening in the past, and we could see that we are still within this inside candlestick pattern momentum here right now. But what if stock markets weaken further, right? The S&P potentially weakening, the Nasdaq potentially weakening, Dow Jones still remains stable, the DAX also looking cool to break higher. But let's compare the Dow and the DAX, more like broader-based economic and kind of industrial companies. They still remain in demand in a way. The worries in regards to AI are more weighing negatively on the Nasdaq as well as the S&P 500, and hence obviously oil is just prone potentially for more profits taking as well, and potentially that the market based on economic demand might weaken on that regard. Speaking of Federal Reserve, obviously another pillar in regards to stock markets. First is monetary policy, and second, economic and obviously kind of companies stats, right? And if we see that the Federal Reserve is not cutting rates earlier enough, we could get further insights as well. And the core PCE price index expected to rise slightly on Friday this week when it's coming out. However, last week's data, the consumer price index actually, and we can make the comparison with the crypto market, consumer prices were kind of weakening, right? Instead of 0.3% on a monthly basis, down to 0.2%. That subsequently caused the stock markets to kind of elevate in a way slightly, but cryptos were starting to rise on the demand idea that basically the US dollar is going to weaken further based on the consumer prices weakening. Federal Reserve expected to cut rates, cutting rates meaning the US dollar weakens, and then subsequently obviously stock markets, risk sentiment, as well as obviously kind of the crypto space rising on the back of a weaker dollar. This week we get maybe further insights, but recently in regards to US motivation, when we talk about Jerome Powell, the head of the Federal Reserve, we got the FOMC meeting minutes from the last meeting. Always comes out 2 weeks after, and the delayed market insights here might not give us much input. I don't think, at least, there is going to be a lot of motivation. However, what we see is that this could kind of drive the markets and the demand story to some extent. So let's focus on this and how this might give us further insights in regards to the future pattern. Looking at another indicator here in markets, that's gold and silver. Let's start with the gold market. Gold prices have appreciated slightly, but now start to kind of remain in a sideways pattern. The daily charts don't give us any further information, at least not for now. We see the upside trend line and the 50 moving average, which had acted as a strong supportive zone and not quite tested much in the long past. But we see now this fairly recent trading, and we've seen that the market kind of was about to break lower, but instead starting to appreciate again further. So gold prices might move to the upside here and could basically break towards higher levels. That's at least how the charting pattern currently looks. Silver looks kind of quite the opposite, actually. And now we get the same story again. If the demand from the economy weakens, oil demand is also weakening, and silver demand might also kind of push the market lower. Plus, we've seen the prices moving up so much, tremendously to the upside, that might indicate now that when the market's story, the demand story, falls, we could see also that silver prices fall, right? I know this time everything is different, but this time to me as a trader, everything is the same. The market had given us a strong parabolic uptrend, and now we see a potential strong parabolic downtrend again. Why that? Because simply this is not a sustainable trend based on charting patterns. We see leverage being resumed. Yes, end of the month, in terms of COMEX deliverables, there could be some headwinds in regards to the negative and bearish motivation. The market might start to appreciate somehow, but hey, this market really in the past has already given us similar trading patterns, and we've seen those same rallies kind of being sold off again, causing downside momentum. Apart from this, we got important trades as well on and with our trading crew here in the dollar Japanese yen, which is kind of quite interesting. Euro dollar we mentioned already, pound US dollar we mentioned as well, the dollar against the Canadian and the euro against the Canadian. I started talking to you guys about early on. So let's finish up this session with a Canadian dollar. The EuroCAD looking kind of quite interesting. The market is about to weaken further. The euro quite strong, but the Canadian might even gear up further momentum. Based on this trend, the market is at interesting highs we have just elevated the market momentum towards above the 70 area, slightly overbought. That could be an argument that the market will start to fade somehow. Second, we see that this technical pin bar candlestick based on last month's trading, the market now slightly higher, but what if the market weakens again somehow further? So similar story with the US dollar. Canadian is the euro card as just mentioned. Early in the month higher, later in the month maybe lower. And with the interest rate decision due, we might get some further information in this regards. Sorry, with the consumer price index, obviously not the interest rate decision. The CPI data could kind of give us some important insights. If prices will start to rise again in Canada, this would be an argument for the Canadian dollar to gear up some momentum potentially as well. Guys, please leave your comments and don't forget to subscribe to our channel. I hope you enjoyed the interview with Mirko. We'll get the link as well to the interview here in this channel again. So we had a lot of fun, and Mirko sees quite some interesting input in regards to the equity world of things. Talk soon. Have a good one. Have a good week of trading. See you then. Take care, everyone. Ciao, ciao.